In this video, I will unveil a gold trading strategy with an exceptionally high success rate. The key advantage is that this method requires no prior daily bias. You will only need to execute a single trade each day at a precise time, eliminating the need for all-day chart monitoring. This technique is designed to generate steady returns and help you successfully pass proprietary trading evaluations. Additionally, you can trade without the stress of upcoming news events. I will walk you through the specific rules for this strategy, and will also share some key insights toward the end, so be sure to watch all the way through. Without further delay, and let's begin. Before we cover the steps and guidelines for this gold strategy, please ensure your TradingView chart is set to New York or Eastern Standard Time. This guarantees you are trading during the correct session, as we recognize that timing is more critical than price. Our trading window is set between 8 p.m. and 10 p.m. This is the period where we will be seeking our trade setup and entry. First, we must approach our charts 3 to 5 minutes before 8 p.m. On the 15-minute time frame, we need to identify and mark the most recent swing high and swing low. Remember, this is for 8 p.m., not 8 a.m. After the market opens at 8 p.m., we must wait for either that swing high or swing low to be breached. This period also coincides with the start of the Asian session, which injects volatility into the market. Once the 15-minute swing level is broken, we will switch to the 1-minute time frame and wait for the market structure to shift, confirmed by energetic displacement. It is crucial that the price candle closes beyond the recent swing point to verify that the market's order flow is now changing. You can enter immediately after the market structure shifts, though this typically offers a less favorable risk-to-reward ratio. This is a viable option if you are comfortable with it. However, for a superior risk-to-reward profile, you can take your entry from a fair value gap or a breaker block, essentially a series of consecutively closing candles in one direction, which provides a more optimal setup. Our stop loss will be placed beyond the recent swing point or the breaker block. Remember to allow a small buffer to account for spreads. For our profit target, we will aim for a 1-to-2 risk-to-reward ratio. Once the trade achieves a 1-to-1 ratio, we will secure profits on 80% of the position, move the stop loss to break even, and let the remaining 20% run toward the final take profit. This risk management technique is optional, but it will aid your trading psychology and improve your win rate. You can also trail your stop loss according to your personal risk parameters to capture additional profits. If 10 p.m. arrives without a valid setup, we cease trading for the day, close the charts, and return the following session. Adhere to these rules consistently, and you will begin to see stable results. Now, let's examine a few practical examples to deepen your understanding of the strategy. Here we are on the gold 15-minute chart, 5 minutes before 8 p.m. Let's begin by identifying and marking the most recent swing high and swing low. I will also add a vertical line to denote the end of our trading window at 10 p.m. for demonstration, to clarify when we must cease looking for setups. We will now advance the price action and wait patiently for one of these swing levels to be breached. Approximately 15 minutes into the trading window, you can observe that the price swept through the marked swing high. Note how the wick penetrated the level, but the candle did not close above it. Our next step is to transition to the 1-minute time frame to await a confirmed market structure shift. The requirement is for price to close below the most recent low, which is the swing that preceded the new high. As we advance the price, you can see it has formed another higher high. Therefore, this subsequent low becomes our new level for a potential market structure shift. The price has once again created a new high, so this latest low will now be our reference point. This process of updating the key low continues until we either achieve a valid market structure shift or reach the end of the designated time window. We have now confirmed our shift, as a candle has closed decisively below the most recent swing low. I will execute a trade at this point, placing my stop loss above the recent swing high, and will target a 1-to-2 risk-to-reward ratio for profit. I will now place a limit order, risking 1% of my capital, and we can observe how the trade develops. The price has triggered our entry. Notice that we also entered into a fair value gap. You could have alternatively taken your entry from that level for a potentially better risk-to-reward setup. Subsequently, the price declines smoothly to our take-profit level within minutes, resulting in a clean 2-hour trade. The move continued further, targeting the sell-side liquidity below, meaning you could have trailed your stop-loss for even greater profits, achieving an exceptional risk-to-reward ratio. However, as this does not occur every time, I recommend adhering to a 1-to-2 risk-to-reward goal for improved psychology and more consistent trade management. Now, let's move on to our second example. I will begin by marking the start and end of our trading window from 8 p.m. to 10 p.m. Next, let's identify and mark our recent swing high and swing low. This is the most recent swing high, identifiable by the distinct lower highs on either side of it, confirming the swing formation. Our recent swing low is located here. After marking both levels, let's fast forward the price to see how the scenario unfolds. The swing high was breached, so we will now drop down to the 1-minute time frame to seek our entry. As we can see, price is already closed below the recent swing low that formed prior to the new high, confirming our market structure shift. We can also observe a breaker block that overlaps with this fair value gap, creating a high probability zone from which to take our entry. I will place my limit order here, with the stop loss positioned above the recent swing high. For the profit target, I will aim for the standard 1-to-2 risk-to-reward ratio. You could also be more flexible and target the sell-side liquidity resting below. Let me place the limit order and allow the setup to develop. Price retraced, filled our order, and triggered the trade. I will now switch to a 5-minute time frame to present the price action more quickly. As you can see, the price moved in our direction within just a few candles, hitting our take-profit level, sweeping the sell-side liquidity below, and continuing even further. You could have captured more profit by trailing your stop-loss. This demonstrates how straightforward trading can be. You don't need an overwhelming number of concepts to be profitable.